Good morning, everyone. Welcome to Metal Markets. I'm your host, Marcus Stalker D. I've been trading commodities for close to 20 years at this point, and I joined Topstep in 2015 as their first female funded trader. My approach is data-driven. I lean on order flow concepts such as market profile, tape reading, supply and demand, options gamma levels, and some statistical averages to find my areas where the dealers are expected to do something with their inventory, and that's what creates the ebb and flow of price action intraday. So every session on the show, we're going to be reviewing some of my anchor points and then talking through some of the possible hypotheses that we could see today. Now, before we begin, Bruno has posted a risk disclaimer, so please read through that so that we're all on the same page. Let's get into the charts. So I'm going to have a look at what the monthly chart is looking like because we're coming close to the end of March very quickly. So that always calls for having a little peek into the bird's eye view. Now, gold clearly creating some kind of a reversal, but we haven't seen the follow through to the downside just yet. So that remains something to keep in mind, because whenever I see, big bearish engulfings, sure, they can turn into a range and go higher, but more often than not, this will be a signal that maybe we should consider some shorts at some point. Crude oil is also looking a little bit more bearish, but for now it's pretty spiky because we still have a lot of headline risk. It seems like that market is just waiting for any news, and then it moves, and then it stops, then it moves again when there's news. So again, headline risk remains high across the board. Copper, similar story to gold. Similar story to gold, but a little bit of a stronger bullish candle that I would like. So this could be more of a range, but there's this bearish engulfing there on the multi-chart that could bring us some more sellers into the mix. If not, then we will see a reaccumulation and then a further upside move, but that really depends on how the market behaves into the end of the month. So now let's have a look at the weekly time frame, and at this point I'm also going to see if I can put the visible range volume profile. Right, so a lot of volume in this area. We have a thinner volume starting from about 569.20, but something to keep in mind with copper is that this is the last week of copper trading in the K contract. It's going to be rolling and is already rolling into July, which will be N contract. So therefore we might see a lot of weirdness there. So rollovers are always difficult, especially in metals, because it's not as straightforward as I call the volume is just rolled. There's a component of open interest where the open interest migrates into the new contract, but the volume kind of takes some time to follow, so it's a bit weird. But I think the rollover has already begun, and they will need to roll by this Friday. So we'll see when the roll happens. And so that's copper. Let's also just have a look at silver for a second, because I have been giving it a little bit more attention recently, so it's come off the craziness. Right, so silver looking similar to gold, but a little bit weaker. So maybe those sellers are turning up in silver more. But yeah, all three metals are looking super similar on very, very large time frames. So let's get back to gold. Go back to the weekly chart. Do we have anything here? So this is looking more kind of like a bit of a reversal that's running out of steam. They keep having trouble. Every time they make a new higher high, they step in and sell it and then end up with some sort of a selling wick. So that is a little bit annoying, because now we have the disparity between what the monthly chart is showing us price action wise versus what the daily chart is showing us, because clearly this is pushing higher, but in a bit of a haphazard way. So we'll see how they want to play that. Volume profile is telling us that the demand areas are located down at 4200s, let's say. A lot of messiness up towards the 5000, but the 5000 area is, you know, still an area of interest, so it might get there at some point. But don't forget the bearish engulfing or the super large time frame. So if you start to see gold rolling over into some crazy shorts, I wouldn't necessarily try and fade that purely because of the way the monthly time frame looks like. But yeah, volume profile a bit messy, very toothy, and I never really like seeing profiles that are like this, because it indicates sort of speed bumps. You know, you have a huge move through an area that creates a low volume node, and then this little tiny area where more volume is spent or more volume is printed, and then they go higher again, but then there's like more volume, so it kind of leads to this push-pull price action over time. So I always like to see a more definitive movement, and this is all just a result of headline risk. So it's a little tricky with toothy profiles, right? Right, what is crude oil doing? Crude oil has reversed on the weekly chart and had one candle follow through. But again, this market is so headline driven at the moment that the technicals may not be that important. But at the same time, we don't know when the tape bombs are coming out, so technicals are the only thing that we have at the moment. So I'm just trying to keep still within the stats, and then if I get smacked in the face by a tape bomb, so be it. You just kind of shake yourself off and continue without getting super annoyed. Daily chart looking a little bit volume heavy, a little bit top heavy in this area. So wouldn't be surprised that if there's any kind of a sniff of a good outcome with these negotiations and the ceasefire, to see crude oil dipping back down towards the 70 level. That would be a lot more sane when it comes to the price of crude. At the moment, we're sitting under $100, and we're also sitting under $90. And one thing that I am seeing is that we're dipping slowly into an area of slightly less volume, creating unclean movements to the downside. You're sort of stair-stepping lower, but that also creates supplies upon supplies upon supplies. And if I visualize that this way, so it's like literally creating little supplies on the way down. So even if they try to go higher, you will get these areas that will be a little bit difficult to break cleanly without a hell of a lot of volume. It's not impossible, because if there is a commercial hedger or an institution that steps in with a ton of size, yeah, they can easily kind of slice through all of these, but that size will have to be pretty significant. So with that, it means that you would need some really strong catalysts to actually make that happen. So again, not impossible, just a little less probable. So yeah, supplies all the way, and you know, we'll see what Trump and company have in store for us. Okay, let's have a look at the copper on the daily at the moment. Alright, looking like a pretty decent beginning of a potential base drop. So we had an evening star reversal, creating a new supply. They tried to go higher, ended up with a selling wick, and now they're trying to push a little bit lower. Now it's very early in the day. Yesterday I tried to run a short, but unfortunately we had a weekend gap that got filled. And I was going to try to use gold to see whether I can find something earlier, and it just wasn't happening. So I couldn't stay awake past like 1:30 a.m. I was actually pretty tired. So I watched it, tried that trade, didn't work out. So now we're basically sitting at a tiny little loss of minus 94, which is fine. But yeah, I'm still thinking maybe copper, some sort of a swing down. If they start to fall away from this area and they leave the area, we actually don't have any major speed bumps to speak of until we get to this point of control here. So if you look at how the price ran up, that's a pretty clean move up on the daily chart, and you know, as opposed to this. So for example, look at the difference, right? So you have, you know, yeah, it's a reversal, but then they go up, then they go down, then they come back up, and then they go. So it's very messy in the way they both arrive there and the way they leave it, right? But when you get a clean rise up with like candles that are, you know, just green and or blue in my case, and they just keep going up, if it starts to fall through that, there is nothing to stop it. So there could be a situation where one of the days this week we see that big sell-off on the daily chart that kind of holds throughout the entire day, effectively a reversal that then causes a single direction day to just kind of keep going and takes no prisoners. So yeah, all right, let's just drop to the daily time frame on gold as well. Ew, yeah, so this is very ugly to me. Again, for the same reason that I saw the toothiness on the weekly chart, it looks even worse. It looks like somebody knocked out its teeth and they haven't been to the dentist to replace that. So it's horrible. It's like one tooth and then a hole, one tooth and a hole. So it's going to be a lot of push-pull if I'm looking at this. And again, the price action that created this profile on the way up is equally messy. So even though gold has a potential to also go into a swing short, I just don't think it's going to be particularly a comfortable trade because of the way the profile looks. So not sure I will be focusing on gold too much this week. I traded it a little bit last week, but yeah, it's a little tricky. I'm just going to see whether the 4-hour time frame looks cleaner. Not really. I mean, it's all just disgusting here. So yeah, so gold is just going to be on my radar purely for like levels and stuff, and to see whether we might be able to reach some options gamma levels somewhere. Let's just load up the 4-hour time frame on crude. I don't know why it takes so long to load up the 4-hour on crude. It's weird. It's a little strange. Okay, so when it comes to gold and the options levels, this morning I looked at it and that 4800 came up yet again. So they just seem to be pivoting around the 4800. There's a bit of a chop zone right above it between 4810 and 4805. But if they manage to stay above the 4810, today we could have a situation where if gold begins to go into a heavy positive correlation with the equities, we could fill the gap, right? Now, out of the three metals that I'm looking at here, copper was the strongest because it filled the weekend gap and then some. Then you have silver that filled the gap and then kind of reversed and stayed away from it. But gold never even made an attempt to fill it. So again, is that weakness? Remains to be seen. But for me, if it manages to kind of start moving above or holding above 4810 into COMEX, then ultimately starts to pop into this gap from the weekend above 4835, that would maybe put me on the side of, okay, maybe we should be long metals now, because gold has this visual cue of like this thing that happened over the weekend, and everybody will be able to see it. So it's a very visual indicator. So yeah. Mr. G says, with my day trading style, what time frame do you use to determine the trend? So I look at the trend from a larger time frame perspective. I don't necessarily look at just intraday and go, oh yeah, it's going up or down. And the reason behind that is because you get a lot of days where the markets may look range bound for one part of the session and then suddenly go into a trend, and vice versa. So you can have a trending London, but then you get to, New York session and then it all dies a death. So for me, a more efficient way would be to actually see what the large time frames are doing, but at the same time, I don't really use trend lines. I look at the markets in a horizontal way. So if there's something super trendy on, let's say, the daily chart, this wouldn't be it. But let's have a look at like ES or something, because I think we're going to have a better definition there. Yeah, so for example, for me, this would definitely be an uptrend with no indications of any reversals, right? And until you get any kind of a slowdown and a reversal on a daily time frame, I would just deem this an upward bias in equities. So it's back, we're over 7,000, and until we're under 7,000, I will still deem equities to be back into the strong uptrend, right? So what does that mean intraday? It doesn't mean that I'm looking for like a breakout trade and then, just stay on longs. I'm actually looking at the opposite side of that. I'm looking at a big pullback and maybe a failed auction long that kind of tries to go lower, fails, comes back into the first hour of trading range, and that would be the point where I would get involved. And that goes for anything. Now for crude oil mainly has a short bias unless there's like wars and stuff and supply issues, which is what we're going through now. So for crude oil, it would be like mostly looking at shorts. And I would rather get smacked in the face on doing a short crude oil than trying a long if I'm seeing some sort of a, reversal into like let's say that we have a long failed auction in crude oil. I would not take that. Why? Because it's against the larger time frame picture. So for me, a trend is just, whether we are smashing through supplies or demands on the higher time frame. Do we have just pure green candles that are taking no prisoners? So until that ends, I've got no business trying to go against that. But as soon as it starts to create a range, starts to create more volume in an area, consolidates, sideways movement, immediately I'm like, should I still be long? Because this is looking a little bit odd. So that's when I start to put in some potential swing trades to the opposite side. Because once you get that change of trend, people say trend is your friend. Yeah, to a degree, until it's not. Now, trend is your friend comes mainly from the equities markets, because over the last however many decades, they're designed to go up. People have the 401ks, they have the pensions, they have, long-term investments. And what do? They buy equities. Nobody in their right mind would sell equities to keep to their pension, right? So there is this like a natural upward bias in stocks and in general, right? But commodities are not like that. Commodities have an actual physical supply and demand, and that sometimes goes wrong. If everything is correct and everything is working as it should be, you will probably see quite dull markets. They're not really in a trend in commodities, nor are they doing anything. They're more like flat. But that also means that everything is good with the supply. Some of the agricultural products, they have sort of bigger swings because there's a harvest, for example, in corn and probably even soybeans and stuff. So there is a definite seasonal tendency to go either towards a supply or a demand, right? So if you have the harvests, then obviously they will be taking that to market. That will affect the pricing heavily. Now, I'm not really an ag trader. I'm more on precious metals and commodities. So the supply and demand in my products is heavily connected to like certain seasonal events. Like, for example, natural gas gets a huge demand during the winter time, but also partially during the summertime because of the air conditioning. So naturally there's a higher use of natural gas, and that's when it kicks up. Right now, we also have a lot of usage of copper and silver because of AI, so chips and a lot of conductors and discs and stuff. They have a lot of copper and silver in them, so naturally there's a huge demand for those products. So it's it's a bit of a simplistic way to just say in the metals, you have an uptrend, therefore it's just an uptrend and it's the end. It's slightly different. You do have to sort of know a little bit about what drives those products behind the scenes. And I'm not talking like, or now become some sort of a whiz when it comes to macroeconomics. No, just the basics of what affects that product, how things are doing in the industry. Like, for example, there is still a huge issue of the silver mining efforts, possibly falling short with all of the AI explosion. Basically, there's not enough silver to go around. So if all of the miners kind of gave all of their silver, it still might not be enough to satisfy the demand that we're seeing. Things can change, of course. They're thinking of going and mining on the moon. They might find an asteroid, for all mankind style, right? They might find an asteroid and solve, all of our issues that way. And I do know that there are some very ambitious projects that are looking at mining an asteroid in an effort to find more materials that we are currently starting to miss on Earth, right? So it's a very interesting time that we live in. But yeah, do familiarize yourself depending on the product that you're trading. Equities are probably unique in that way because they are mainly cash settled, so you don't have like any kind of physical product behind them that gets kind of delivered to your front lawn. It's just like a cash settled product. But yeah, some of the other products, like the ones that I trade, they definitely have a strong impact at certain parts of the year with the actual physical supply and demand, and I think this is why I also enjoy them. So yeah, so the way I look at a trend is probably a little bit different because of that. But it's still useful to know what your product is doing on a large time frame. Yeah, so Ems is saying something there. Yeah, it's actually true. I'm not joking. I know that sometimes I kind of crack jokes and I'm like, ha ha ha, aliens. But no, it's an actual effort. Like I think Elon is looking at going and mining things in space. It's not a joke. It's like an actual project. All right, let's get into some of the options levels intraday now. I didn't have time to do them yet this morning. I'm kind of dealing with Leonard and stuff, so I had to like feed him, and then I logged into the platform, and initially it was just all blank. So I still have that problem. I actually had to use Edge over Chrome, and for some reason it literally deleted all of my markers. So I just couldn't be bothered sitting there and starting all over again. But we can have a chat about the levels. So out of the options in gold, I am seeing that same 4800 level still showing up as an important area. Now whether they go into a pinning behavior, that will be something to maybe look at as COMEX is already in force. So what does pinning mean? It means that the options level of interest kind of becomes a middle of the range. So the price is kind of oscillating around it, but they're not really taking the price away from it anywhere. Now with gold, unfortunately, in these ranges, that could still span like 300-400 ticks in between the 4800 level, and somehow this is starting to sort of smell of that. They've been doing this pivoting behavior around 4800 for quite a while now, and you know, we've had moments of prices going above it and below it, but it always kind of seems to come back to it. So there's something to do with the 4800 that the institutions are finding really attractive. So naturally, if that really breaks down and you start to see the market rolling over, maybe through this lower volume node here at 47.73, that would signal to me that we are rejecting these higher prices and we are definitely going to go lower. But until price is above 4800, I'm just going to assume that pivotal action while staying aware of this little weekend gap that we've just created across the board. You know, nearly everything. When it comes to the gap fill, I do have 48.50 area as a weaker call wall, but purely because there's a gap there, I would say that that would be as good a target as any if they do end up wanting to fill the gap. And does ES have the same? Hold on, let me just remind myself. Yes, the same thing. With the caveat that ES has started to fill its gap. So with this being an equity index, we've seen this before. Yes, sure, they can kind of roll over, but if there's no terrible news coming from the Middle East conflict, we could just see the prices come back and go to the all-time high. It would not surprise me because it is an equity index. That's just what they do. Is this new? How am I doing this? Yeah. This is new, isn't it? They did a little update. Mr. G says, do aliens have the same diet needs as humans? I'm asking for a friend in my closet. E.T. I wouldn't know. We recently met Rocky from Project Hail Mary. He definitely has weird dietary things. Yeah. Nitish says, good morning. Good morning, good morning. Let's see. So based on a daily chart, you decide if the trade has an underlying trend for day trading. Yes, Mr. G. Yeah. So I don't take my trends from lower time frames, but I stay aware of any bias that we have on the larger time frames, and that will change the way I approach the day as well. So, you know, if you see maybe a mean reversion down back to value, so let's say we open higher and then there's a mean reversion opportunity, and if it's a strong uptrend, I will actually stay out of that and only try to catch a trade on the long side from the value high test. So you test the value area from the outside on ES, for example, and then you have the trade that is trading with the larger time frame trend rather than against it. So it's not to say that the mean reversions against it won't work, because I've known people who are actually really good at catching scalps and opportunistic mean reversions intraday, but that's a more difficult path to take and it takes a lot more skills. So for anyone who is still learning, struggling, finding themselves, if you see a super strong uptrend on the daily chart, there's no any reversal, there's no overlapping candles inside bars or anything like that. It's just like straight uptrend until you get a day where we roll over and actually create a bearish candle. I would just assume that it's a strong uptrend and not fight that. So any pullback that is a reasonable pullback, it becomes game for further longs. Does that make sense? But yeah, so for now, 48.50 on the top side on gold and 4800 as a potential pivotal area. To the downside, same level, 47.50, where they almost bounced. So they kind of missed it by a few ticks here, and then Asia went into a big reversal. And then if they start to lose that, so if we definitely lose that, we have, I mean, really 4700 would be the next level where we might see a bit of a slowdown. In cases of a huge jump off a cliff, wouldn't be surprised to see it down at 4500. That would be an outlier day, and it would be driven by some sort of a catalyst as well. So it would need quite a strong push. That would be like institutions unwinding positions. It wouldn't be, hey, your friend Joe down the road trading one MES on a sim. It will be an actual institution doing that, right? So it becomes very obvious. All right, what else? Let's have a look at where Asia high and low were created. Now for this purpose, I'm using Globex Open as a reference, and then Tokyo close for any ends of the session. And, you know, I am a bit slower today because, oh, that's new as well. I like that. Did you see that? Because you hover over it, you click on it, and then you click into it, and you can add text. You don't actually have to go into it. Whee! I like it. Now, I do need to go into this because I want this to be... Really? Is that the middle? That doesn't seem like it's the middle to me. This is a bug. This is a bug. So what happens if I go top? Someone hasn't done their pixels correctly here. This should be in the middle. And now it's like above it. It's weird. Anyways, we'll work with it. Now I'm gonna find the end of Tokyo session, which was 7 o'clock. Okay, so nothing changes there. It's this one. The top. Just call it Asia high because it's the same. So that will be your reference high and low, and as you can see, we're still well deep inside it. If we ever start to break out of it, that would mean maybe a potential for, first and foremost, a liquidity sweep above these 2 points. But if they are breaking out of it and they're starting to hold 30-minute time frames, especially if they hold 2 30-minute time frames strongly above or below the Asia range, that would be more conducive to the breakout. And in that case, again, we need to look at the larger time frame developments and how the market will behave. But until then, Asia has made the defining high and low, and that's the only reference that we have. Let's do the same for copper. Even though it is rolling, that is still useful. I'm going to go down to a 30-minute time frame. And then we're going to talk through some of the options levels in copper as well. And you can see how much it filled the range. Filled the gap, and then some, right? It went way past it. Where's my copper? Copper has a level at 615. So these are the anchor points. So in the way I do things, I only want to look at the levels that have a high probability of doing something, something that is a little bit anomalous, either in the Greeks, the way options participants are positioned, but also in the open interest, like how many people are there. Now that could come in various different combinations, but basically what I'm seeing in copper today is that we have no relevant areas on the monthly options deep inside this Asia range. So we do have a pretty interesting level at 615, which is outside of this whole area. And it's really not trivial. I would actually classify a mega core resistance here. Why? Because copper is pretty thin, so anytime you get to like 80 or 100 contracts, that is like a lot of contracts for this product, because it's like usually you get like 2, 5, 7, 15, and then you see one that has like 79 volume there. It's like, what's that? And then to the downside, similarly, I see 590 as a relevant area. So whenever I see a huge distance, now this could be the rollover as well. You know, the tricky part about rollover is that you get a messy outlook because it's all like split between the two contracts. So some people are switching over, they're rolling into a new contract. That means they have to close out the old contract and open up the same thing, switch into, the end July contract. So that skews things a little bit. But still, it's interesting to me that most rollovers will have a whole bunch of levels at the current area, because people are hedging. Some of them are, wanting to get out along. Some of them and it causes like a lot of congestion in like a very tight space. But what I'm seeing today on copper is quite the opposite. We have two clean areas and not too much on the way. So that to me is kind of interesting. And that might speak to the fact that there is still interest in moving copper quite a bit somewhere. All right, let's have a look at crude oil. Let me just find it first. There it is. Okay. Now, crude oil, when Asia is fairly lively, I will put markers. I'm going to argue that this range from Asia, apart from this little spike that we had at Globex Open, that this is not much of a range in this situation because it's so volatile. So I'm not going to be doing that because it's too small, right? It looks so easy to take out. And I don't necessarily want to be doing breakout trades on crude oil because it's very prone to like a double-sided price action where they go one way and they ping it all the way especially if it's like a tape bomb. So but even without tape bombs, that's what crude oil does anyway. It's a very, very double-sided product. So gap still very much in place to the opposite side of gold and ES, and that means that at some point they might want to take the gap, right? It's always a possibility. Very much so depends on the news. The news. So I'm going to be super patient today. Don't know how much I'm going to be trading. Before, I've been liking trading Asia. It's like the only problem is I can't, like I have to sleep at some point, right? And I am finding it much easier to trade Asia, but at the same time very difficult to pair my daytime duties with my desire to trade Asia. But I'm finding the price action much easier, smoother, with more conviction. Whereas the New York session, because Iran is awake, USA is awake, and they're all talking. And then we get the Fed speakers that just randomly throw in some tariff news in there. It's like, just stop. It's like, what are you doing to us? So it's led to this like really messy New York session. And frankly, I'm a bit of a lazy trader, so I look for trades that are, easily identified but would offer me a lot of ticks. And, I don't really like it when I'm in a trade for 2 hours and it takes me like 2 hours to get like 10 ticks. That's not why I'm holding a trade longer. I'm holding a trade in order to give it more time to make a move that should bring me more ticks. That is the whole idea of holding trades longer. But what's been happening in the New York session is that it's all tug of war, push pull. So even if it has a directional move in commodities, especially crude oil, one piece of news and it erases all of that. So it's like, so I'm not liking that at the moment. I'll be honest. I'm not enjoying the New York session, and I'm trying not to trade too much. So I will be doing a lot of my trading in early Asia, if there's anything obvious, and then maybe trying a couple of trades, and then if I get smacked in the face, I just take whatever I made in Asia and, finish the day. But yeah, that I'm expecting that to remain the name of the game this week as well because of the conflict, right? Ems is saying there's like 3 markets doing that roll shimmy. There's silver and there's copper. I don't know whether anything else. Oh yeah, actually natural gas. Yeah, so nat gas, so Natty is rolling. Silver is rolling and copper is rolling. I don't think anything else is rolling. We've had the energies for crude oil, RBOB, and heating oil. They've rolled already, so they're already in M contract. So platinum is rolled into July already, like 2 months ago or a month ago. So yeah. There was a question here. Let me have a look. Mo Avery says, morning D, can you show us where do you get your weak, stronger call put walls? We can use gold. Well, I would show it to you, but it involves an API ping that I pay a lot of cash for. And then it aggregates, so it's my code, and there's like 3 different scripts. So one of them aggregates the implied volatility and tracks it day to day. Another one looks at the Greeks and takes the entire chain and then aggregates the data by strike. And then I have another one that just literally looks at open interest. And then there's a main app, like I call it my main app, where it kind of jams all of this stuff together into one cohesive sort of logic. And it then has a function of spewing out the configuration strings that I'm using on my charting packages to obtain that. But obviously that's something that I do, and I do post those on our utility Discord server as well. However, you do have companies such as Mon-Thurs, which have they're very good for like starting journeys with the options and gamma levels, right? Because you're not looking at necessarily trading options, you're just looking at using the levels. So I would say, you can start using Mon-Thurs, but you can use just the gamma walls, GEX 1, 2, and 3. Maybe HVL. That's basically a gamma flip area. But to me, right now, I'm looking at the monthly and everything is in negative gamma. Maybe that will change if I had a look at just the 0 DTEs and how the intraday options are expiring. But yeah, so the way I'm scraping my levels and aggregating them and then determining the anchor points is a little bit different than what Mon-Thurs does, because they put basically any and every level of interest and they do it from the end of day, whereas I like to take snapshots throughout the day as well, especially if we have like a large movement. For the most part, I will take a snapshot of London, probably within like the first 2 hours of London. That's where my levels come from. And then after that, if we have like a super large move that kind of gets outside of all the levels that I've had in the morning, I will rerun the code to kind of re-grab everything and re-aggregate everything. But that's probably a little bit tricky for beginners. So all right. Highlight House TV says, is it hard to get 150k funded, or can I get it overnight? Well, that will entirely depend on the level of your skill. If you are experienced, if you know what you're doing, technically, if you know how to trade through multiple sessions, you could do it that way. But the problem is, you would probably have to trade with quite some size to get 9 grand. I don't like seeing people doing that, because we've gotten the industry into a position where you have these sim farmers who do that. They go YOLOing in evaluations, and then they kind of trade with a significant size across multiple accounts, and they've started rinsing the prop firms. So it's like, that's fine, but if everybody did that, prop firms wouldn't exist, right? Nor would we have, like, maybe they would exist and continue to exist, but this XFA sim to get live actual money, that would quickly just disappear into the ether, never to be seen again. So is it possible to get a 150k account? Yes, if you're very confident in what you're doing. So you can maybe try doing a New York session and then try trading a part of the Asia session. And then in theory, you will pass in about 12 hours, right? Because it kind of rolls into a new day. Is it the best thing to do? Probably not. And for me, even when I'm just adding like another funded account for whatever reason, I will do it over 3 days. So I will basically use no more than 3 minis, typically on crude oil. Back in the day when we could still trade full HG, which I'm actually sad about. It's not, like, it just doesn't allow us to. It's not enabled. I don't know why the full copper took the hit, because out of all of the metals, it's the most sane one, nor has it changed its median historical values, but I don't know, maybe margins have changed, so. DJ Run says, I thought silver would be rolled to July by now, but not yet. No, so the metals usually are supposed to finish current contract trading at the end of this week. Why? Because it's the final Friday of the month when they roll. Something like crude oil actually rolls the 3rd Thursday of the month. Weird. But yeah. So yeah, it is it's interesting, but it's not odd to have the metals hold on to the previous contract until the last day. Let's see. 777 says, I wish you were live at Asian market. That would be impossible. I'm gonna mute myself. Doggy school guys are here, so we got some barking dogs. Right, I'm just gonna do something here because the dogs are getting picked up. So I'm gonna suppress the noise as best as I can, and to see if we can continue to chat here together. So yeah, live at Asian market. I would probably fall apart if I did that. Now, first of all, like, we do these lives, but I've got to be honest, I'm finding, like, now that I'm a little bit older, I'm finding it really hard to, like, stay on top of chat and look at order flow and make trading decisions and try to, you know, scale into positions as and when required. I'm finding that really difficult. And I don't know whether it's just my brain has aged or what, but you know, for me, doing kind of live trading at the moment and talking and chatting and keeping track of chat and questions and answering, it's gotten to a point where I'm like, it's very difficult. So, you know, in a way, yes, I can do it, but let's just say that by the end of the day, because, you know, obviously I'm in England, so I'm unfortunately awake from 7 a.m. because we've got dogs. I've got a sick dog that I also have to give meds to, like 4 times a day. I obviously do these streams, and, you know, I have to be awake during the day. So by the time that I get to about 8 p.m., 9 p.m., I'm absolutely, like, wiped, shattered, knackered, however you want to say it. So me kind of coming on to do another live stream for Asia, that would just be like me slumped in a chair, half asleep, not really, like, it wouldn't be a very engaging live stream, unfortunately. So yeah, maybe I just need a vacation. I feel like my life is a vacation in a way, because, you know, as a trader, you don't really work 24/7, right? You don't, even if you're a full-time trader, you're not, like, you're looking at the markets all day, but, you know, how long are you actually in trades for? Because for me, yeah, it's maybe longer than most, but it's still only about like 100 minutes. But yeah, I wouldn't be able to, you know, stay awake and just go, hey, let's do Asia. You have Dakota for that, you know, he does the Asia session, so yeah. John says, when you need a partner on the show. Do you know what? Because Topstep is primarily a USA company, we tried to get people, you know, I have had Coach Ray on here. I've had Coach Robert. I've even had Coach Jay and Coach Dakota a couple times, but the problem is that the time of the day, even now that we've changed the time slot, is still super early. And I just feel so bad. And there's not that many of us who are over on this side of the world. So it's very, very tricky. And you know, I feel really guilty just going, hey, why don't you not sleep and come and join me on my show? So it's been a real challenge to actually get a partner. So maybe at some point, if we have another one from another person from EU or England. So yeah. Let's see more questions here. Yeah, another thing that I was saying about the metals. So yes, they have the gap. Yes, they have levels. But everything, including crude oil, is opening inside the value from yesterday. Now, what that means is that the price action might be a little bit tricky, and I'm probably gonna want to sit out and basically wait until we get the New York Open, because it's Monday. You know, we don't want to be digging massive holes on a Monday. But at the same time, when I'm looking at the value areas from like last week, for example, from Friday, I can see that we will be opening with an imbalance. So for example, let's say gold. So if I take the COMEX fixed range from Friday, doesn't know my colors. What is going on? They've definitely did some updates. Ew. So I'm going to have to change these colors because I can't even see the candle. But the edge of so the edge of the value from Friday is literally right above Asia high on gold. So what does that mean? It could mean a test of the value low, even though I would argue that we've already done that, because Asia high already did the price discovery and created a reversal there. So, but you know, COMEX and New York Stock Exchange and NYMEX, the values look like they might be opening with some imbalance, which might make things a little bit easier. Everything that I've looked at today, London-wise, copper, inside value, crude oil, inside value, gold, inside value, silver, like everything is inside value. So what does that mean? It means that those markets for this time of day, they are in balance. So for now, that means patience in order to get potentially better trade locations, or to start, you know, waiting for the tape to liven up, because everything is like super slow. I'm, you know, kind of keeping an eye on one screen for bookmap. Crude oil just kind of showed a little bit of life, but everything else is still just like a big snooze fest. So yeah, gold looking flat. There's a pancake. I mean, crude oil is livening up, but it's still flat. Copper kind of fell earlier. Now it's trying to do a bit of a mean reversion maybe. But yeah, it's all just like balance. It's like I don't want to trade balance markets. I'm not Dolby. And on a Monday, I can't be bothered with ranges. So I want something that is easy, that's going to put me ahead on the day, and yeah, that's what we'll see. Great question here. The Afghan trader says, hi D, is it a good idea to short the all-time high or not? If not, what is the reason? So here's the thing. If it's a scalp, it's actually a great idea to short the all-time high. But not if you're going to expect some big reversal and a huge swing out of it. And in fact, that is one of the setups that JD does. So JD is frequently on the opening call and throughout the entire day. He's on various segments. He's on the main broadcast a lot. He has a setup where he will put in the offer just above the all-time high. but he will only look for like a few ticks out of it. He's not going to be holding on to it until the cows come home, right? He's just going to be like in and out. Done. So all he's looking for is that liquidity sweep, and that's it. Now, some of the ways that I look for my liquidity sweeps, my ones are typically based around Asia highs and lows, and they do have more juice in them. But let's say on ES, if you have an all-time high, the only kind of shorts around the all-time high that you can have is that scalp. Because more often than not, they have this like little liquidity vacuum. So upon the run through the all-time high, they will come back. But then very quickly, the buyers will you know, regather power. They will reload, so to speak, with their positions and take it right back to the all-time highs and past it again and again and again. But it takes a little bit of time for them to do that. That's why, you know, a scalp around the all-time high is not a terrible idea. But at the same time, if you have some sort of a news release, like let's say we have, I don't know, like an NFP or something, and that's when the all-time high happens, I would highly suggest that you don't try and fade those, because there's a lot more volume inside it and everything is thinner, so it's easier to move, and therefore there might be just a breakout, like a sweep with the direction of the break, and then it holds, and then you see another sweep and another sweep, and it just keeps going away. That means you try one scalp, if it fails, it fails, and you see those, you know, directional sweeps on bookmap, on tape, just stay away from that. Gold does that a lot when it's going into all-time highs, and I think ES does as well. Like, I haven't watched ES that much recently, like in the last couple of years, and it does have a penchant to run sort of like zombie rallies, but still, it's you know, it's not a bad idea at all. As long as you know that it's just a scalp. It's not some kind of big swing opportunity where you're going to catch the highs and, you know, you look like a wizard or whatever. So it is mostly just a scalp opportunity. Derek says, hey D, I have a 50k XFA, which is the only account I trade. How do you manage if I want to add 150k account? Trading different account sizes just sounds messy. So here's the thing, I do have a couple of XFAs, so I have the 150 and I have a 100k. I tried the 50ks, I don't know, I can't make them last. It's not for me. Frankly, I think it's because of the larger stops that I'm using, and there's just not enough room personally for me. So I dislike the 50ks personally, but they're great for beginners, right? They're awesome for beginners. If you're adding on to the existing XFAs, I do it by partialing it. Like, let's say one of them I will only trade during Asia. The second one, I might trade a mix of London and New York. Maybe everything, a bit of everything, right? But maybe with smaller size, because you're trading more. So therefore, maybe that would be just like, 2 micros max on that one. But on the one where I only trade Asia, maybe I'll do like 1 or 2 micro silvers, which is bigger and not a true micro. So, you know, that might be a bigger return. Or maybe you can have one where you kind of trade smaller size, but you trade during the same times of day. So, you know, you execute a trade, let's say on 5 minis on one, sorry, not minis, 5 micros on one as a kind of like a normal to higher risk trade. And then you have another one where you just trade 1 micro. So, you know, you can there's, you know, multitudes of ways of doing it. But if you're not used to trading multiple accounts, that's another Pandora's box. So it's definitely a can of worms because you can get confused, and, you know, if you forget, now you have, I think they've implemented the hedging, automatic hedging detection. So, you know, maybe you'll forget that you're long swing in one, and then you shorted because it's been a few hours and you forgot that you're long in that one. That's never happened to me, by the way. I always kind of go with the intention of doing something with the hypotheses. So I'm not just randomly kind of clicking buttons. I have a directional move. Even on a bad day, I will usually get smacked on the face 3 times trying the same direction. Then kind of flipping and flopping around the same level. But yeah, you can definitely get yourself in a bit of a pickle if you're trading multiple accounts and you're not used to it. So maybe if you're just new to that, just try adding one XFA and then see what gels with you. You know, maybe you just want to have different risk parameters. Maybe you want to have the same position size, but maybe one of them you have a bigger daily loss limit. Maybe that will serve you better, right? Many ways of doing it. So again, without knowing exactly what you're trying to achieve and how you trade, I'm just kind of guessing. Yeah, just guessing. How much do I risk a position in dollars on a 150K account? Need to see how much the traders they keep their accounts risk. So here's the thing, because of what I've just spoken about, it really depends, right? So I usually have 2 or 3 XFAs, right? Unless they push me into live, which happens, more often than quicker than I would like most of the time. But I will be, for example, maybe risking $1,000 on one of them per trade, with the intention to only do one trade that day. So I only have one go. So if that one loses, I will then be like, okay, so that's my high risk setup, and I've hit my daily loss limit, self-imposed, 1,000. The end. Let's go have a look at the other part of the session. So then I will go to bed and that will be it. But then let's say that I have an account that I've designated as a super risk averse positioning. So I will only be doing 1 and 2 micros, and usually it will be something on copper or crude oil because those are true micros. So in that respect, I will risk anything from $55 per trade up to maybe 200 if we're talking, a highly volatile product, and maybe 2 micros, like on crude oil, for example. So it really depends. The risk models are very much individual to the style of the trader that's trading, and unless you come to me to teach you the full ins and outs of the way I trade, the playbooks that we look at, the number of trades that we're aiming for in a day, the playbooks that you can go back and look at them in a very systematic framework, but also recognize them very much in real time. So without putting all of that into place, me telling you, risk this much or that much, it will literally just be giving you a tiniest piece of the puzzle that does not serve anyone anything, right? So the whole point of these shows is to serve the community by providing the educational parts that are most beneficial to everyone. Does that make sense? So, if I tell you, well, I do use 2R multiples, but I rarely trade past 5 trades a day, right? And then you get somebody who trades, you ask a question and it turns out that you trade 20 trades per day and that you have a negative risk reward. So whatever I tell you how I'm risking my money, it will definitely not apply. So you can't risk 1,000 on one trade as a scalper because you're not going to last 3 seconds. So, Sorry, I'm just answering something here. Alright. Do I have a channel? Yes, Bruno has just put it on. Market Stalkers is my channel. I've actually been on YouTube technically since 2015. Started taking it a little bit more seriously during COVID, because I didn't know what to do with myself, frankly. So I'm like, hey, that YouTube thing, yeah. Let's talk to some people. So yeah, I would like to give you more pointers, but again, it's, you know, usually those of us who are able to keep accounts for long periods of time, it's like, especially if you're in a live account, you have to risk, especially now, the way the live is formulated, you have to go back and think to start with like 1 to 2 micros, and then, you know, you try to get over the first sort of 30 days in the account without getting into the shoulder tap XFA, so you don't want less than a drawdown of more than 30%, and like whole bunch of new ways. So yeah. Vital, what are your thoughts on scalping ES 4 ticks? Terrible. Don't do it. So here's the thing. I know that back in the day when I first started trading, this was 2007, 2008, you had these seminars, okay? Seminars where you would go, and to be fair, that was probably like 2012, 13 when I went with a friend to a seminar. That's exactly what they had. So they were like, risk 4 ticks on ES to get 8 ticks. Yeah, with one pretty crazy difference that in those days, ES was moving a whole 20 ticks in a day. Whole 20 ticks, that was it. 5 points. So now, when we have the volatility where ES is moving 314 ticks, does it make sense to risk 4 ticks to get 8 when it's offering you over like 10 times that? So anybody telling you use a hard stop of X amount with that target, just run away, run for the hills. It's a terrible idea. Right now, what I'm seeing scalpers doing, like for example, JD will maybe use 5 or 6 points, which is 20 ticks of stop loss, and then catching 10 ticks, 10 points, so 20 ticks or whatever it is, right? So it's a different volatility. VIX is higher, the markets are different. You can't be trying to scalp 4 ticks in a 300 tick range or 8 ticks. Like, why? Because the 4 ticks of stop loss will last you exactly a nanosecond. So you won't even have the time to allow the trade to do something. But back in the day, when it was only moving 20 ticks, you had plenty of time. Hey, there were days when it was moving like 5 points, right? 5 ticks. And then you know, you would have these pit scalpers. I think Hogue was one of them, actually. And they would be scalping 1 tick at a time. 1 tick, 1 tick. Why? Because it just wasn't moving that much. So that was okay. And then, you know, it started moving a bit more. Whoopee, 20 ticks. So people started using 4 ticks for stop and then capturing 8 ticks, which is what? Like, let's calculate it, right? So it is what? So 8 ticks. Yeah, you're basically grabbing about, like, basically about 30-40% of the range, right? So put that in perspective of 300 ticks, roughly. And if you want to grab the same amount, it's actually more like 120, really, right? A third of the range. So just keep those like scalable risk models in mind. I'm still seeing a lot of people from back in the olden days who are like, yeah, well, we used to trade ES and 4 ticks and you know, stop loss and getting 8. Yeah, back then, a million moons ago, that worked. But now, it ain't the same, man. M said, went with a friend. Sounds like the volatility sucked. Yeah, no, it was a friend. He actually was a very good friend of ours, an Australian dude. So he was a funny guy, actually. He's we still keep in touch, actually, these days, but he was a funny dude, so. Base your stop loss on average volatility. Yeah, so I have my own formulas where I do indeed base my stops on the ever-changing volatility, and that enables me to always use a little bit. Sorry, my dogs are screaming again. It enables me to always use an appropriately sized stop loss in light of the volatility. So I call it the volatility adjusted stops. So yeah. Oakland Torch says the ATR for ES for the past 20 days is around 100 points. I have my own way. So this is why I say average daily range, average session range. And I'm looking at the average session range for the New York session. Because Tokyo is 135 ticks, London is 158, but New York takes the cake with 306. So yeah. Somebody's still screaming. Vladimir, pozdrav, brate. Kako si? I think I answered that one already. Okay, cool. What's the time? Okay, we've got a few more minutes here. Let's see whether anything is setting up. I mean, can you see this? Everything's so quiet. I've been talking, and have we actually moved? Have we actually moved? At all? Anywhere? So copper has been stuck in a 30 by, let's say, 40 tick range, right? Crude oil has been stuck since I started in 120 tick range, which is nothing because at the moment it has 700 tick range, so it's pitiful. And then gold has been moving again 168, but gold currently moves. Where is my gold chart? Currently moves 1,024. So yeah, these are dead markets. So we need to wait until everybody wakes up, has their coffee and maybe a line of something, and then not me, the wizards, the traders, market makers, and then maybe we'll have some opportunities. But this is all very, very quiet for now. Just like range bound. Okay. You know, in the beginning of all of these streams and stuff, I kept like trying to force a trade because, you know, you'd get people who are like, "Damn, you trade." It's like I can't do a trade when we have nothing going on, right? And unfortunately, I was like, "Yeah, let me try a trade. Let me do a trade." And then I would dig myself a little bit of a bigger hole. So instead of like minus 94, I would then be starting my prime time of like trading like around the euro close with minus 300, and I'm like, you know what? I'm not going to trade for chat. And, you know, if we're going to do trade attainment trades, they're going to be done in the combine. They're not going to be done in the extra phase. So, yeah. Let's see. Johan says, I took 10 months of evaluation to fund it of one account and still not getting a payout. Should I increase my contracts? Oh, dude. So this is again another one of these questions where without knowing how you trade, I can't really give you a super kind of in-depth suggestion of what you should change. It could be the case that you're scalping and you're only getting tiny little scalps. So you're getting like $50, $40, $20 per trade per day. And you never, like, this is not why we do prop trading. You will never get to a payout that way. So the whole prop trading should be done with a strategy that can bank you a decent amount of ticks per day. Whether that's via, semi-swing trading, because like kind of similar how I do it, or whether it's, scalps that can amount to a good dollar sum each day, definitely over $150 per day. If it's anything less than that, I will say that you're either trading the wrong product, and again, I know nothing about what you trade or how you trade. You're either trading the wrong product, or your scalps are too small, or as in tick wise. It's not always. It's almost never about increasing the size to solve your issues over lack of P&L. So it's like there's so many things that are variables and parameters that can totally mess you up. So let's say that I tell you, and by the way, not financial advice, suggestions only, that I tell you, you should definitely increase size. But you're already trading with like one mini, which I don't know. I don't have that information. And if you're trading with a mini and still not banking, that either means that there's something wrong with the risk model in general, or there's something wrong with the strategy. So it's like you should be able to bank something. Or maybe the strategy is fine, but you're messing with the strategy. So instead of doing like one trade per level, then maybe the strategy calls for, you're doing 3 or 4 trades. Therefore not really following the strategy. So I don't know anything about your style of trading. So yeah. Would I recommend holding gold from 47.90 into the New York session? I would not recommend anything. It's your money. So yeah, again, this is not a trading signals service, right? Right now, it's really difficult to say that we're going to be going up or down because we have this looming gap above, and yet they haven't done anything with it. So the only trade that I can see here is more like a Dolby style range trade. And for me personally, I am not even in a trade because of that reason, because I don't see a potential for anything at the moment. Would I hold a range trade into a COMEX? No, I would just take it to the top of the range and finish it. Because again, COMEX, if we've been going up, this is going up in the late part of Asia, and then also not going anywhere. The likelihood is that COMEX is going to go into a pullback against that. So then you're exposing yourself to that pullback reversal COMEX does against whatever London or Asia have done. So, and then you have tape bombs, like Nitish says, right? So you have so much uncertainty, and then one little tweet when he wakes up, and you not only have the stop taken, and then some, because it slips massively. I got slipped instead of 350, which was my risk. It was almost $700 the other day on crude oil, like that. So I was like, great, that's now close to my sliding loss limit, because I took a payout, and every time I take a payout, I tighten up the risk, right? So, and then once I, have a few days of green, I might release it again to something more sensible. But yeah, I was like, okay, so it's just, 700 risk, whatever. And then it just ate up all of my risk allowance in one slipped trade. So I was like, okay then, combine it is for the rest of the day. But yeah, it's just the nature of the market environment we're in right now. Dennis says, I just started using Topstep and noticed my chart markups are always gone when I close back and log. Okay, so you see this part here, so it says gold and copper for me, but just there is a save layout whenever you change something. So save that layout. Okay, that's number one. That's like saves the chart layout. You can even name it, make a copy, do whatever. And then also try to save the layout of the actual platform where your dome is, where your charts are. I think it even saves some of the settings. However, beware that whenever they do a refresh and an update, a serious update of the platform, they will always mess with your setups, unfortunately. So it's just how it is. Yeah. Ems says, hey, when some folks ask D, hey, if you were forced to buy or sell right now, what would you do? Well, to be honest, I get asked that anytime I'm on Topstep TV, right? So we typically get, like anytime I'm on fast markets, it's actually one of the reasons why I dislike it. You know, I come on fast markets, I have my like crude oil, I have my copper, you know, everything. And then someone on the stream goes, hey, D, so what do you think about NQ? I don't know. I haven't looked at it. And then all of my mental capital goes to find something that makes sense for NQ, which I don't really trade. And then I forget what I was doing on the other end. And look, it's down to my age as well. I've noticed that my brain has been a lot slower. I've said that before. And it's just, it's not the same. You know, my brain when I was 20 and 30 and even, you know, early 40s, I was still like snappy D, right? And now you ask me 2 questions and I'm like, sorry, what was the first question? I'm like a goldfish, can't remember anything. It's terrible. But yeah. So what would I do? I mean, I would give, if it's like someone like Hogue or Dre or someone like, I will answer, of course. But in the beginning, we were actually encouraged to do a lot more trading, which was not in line with how I trade. So I would sit there and then I would get, like, we're talking very early days of Topstep TV because I joined them like 2 weeks after they started. And I was sitting there. Now, obviously, we had MP here as well. And he was like, D, you have to do more trading. So you would just get like a Slack message going, D, you need to do more trading. And I'm like, well, what the F do you want me to do? It's like, I don't have a setup right now. And they're like, yeah, you need to trade with more size. And I'm like, what size? Like, what are you talking about? It's like, it's not going anywhere. And crude oil was dying on me as well. So it's like, not only was crude oil not doing anything, but you're suddenly getting poked from the production team to kind of trade more size. And in the end, I just said no. And that's one of the reasons why I'm not on fast markets anymore. Because, you know, a lot of the times I come in and I just sit there for half an hour, right? Because it's not, you know, the setup is not there. And, you know, I can talk and I can be funny and look pretty, but if there's no setup, there's no setup, right? You know, there is an aspect of tradertainment here, right? I have to say that because, you know, whenever I'm, you know, in group coaching or something, I want people to stare at something. And that's the reason why you will sometimes see me, hey, I'm in 2 micros because, you know, I'm already up on the day, so I can afford to eat up some, you know, a little bit of a stop. But at the same time, you know, it might work, so it adds maybe $100 onto whatever I have already, or you lose 100. So it's like, it's fine. But at least people can see that you're clicking buttons. Because I was being accused by never trading. Saying, I've never seen you click a button. Oh, really? You've never seen me trade? Ever. And of course, it would be like a person who drops in once in a blue moon, doesn't know that I'm more of a swing trader type person intraday. And it's like, you know, they will always be ultra critical and they will be like, oh, troll like. When I had like black and red flaming hair, people used to, trolls mainly, used to be like, oh, you look like the stupidest punk. And I'm like, yeah, what do you look like? They used to love rattling their cage. Vital said, let's create the nickname Deeyana Trades. Please, no! No, I do not want to sound like a million other people. This person trades, that person trades, this person trades. Yes, we all bloody trade, right? Stop calling yourself something trades. I think there's too many people with that name, okay? I'm Market Stalker D because Market Stalker D was given to me by my colleagues in the brick and mortar prop firms because of my style. Because I sit and I stalk the level. I'm like a chameleon. That's why I've got my little cami bob over there. Because I don't chase. I just sit and wait for the levels. So for my levels today, I said 4,800 is a level of interest for sure. We never even touched it on gold. On copper, I really want to see it at least at VWAP, but maybe even at Asia high before I do anything with it. Or Asia low. I don't know. We'll see. Crude oil, 90 is a definite point of interest because it's a pretty big call resistance, let's call it, and also where the average daily range for London is located. And then to the downside, if we ever start getting into this gap fill would need to be showing up as a strong 30-minute time frame candle closing underneath it with no buying wicks. And then if I get that, my first point of interest is 85, and then my next point of interest would probably be, past settlement somewhere, let's say 83 maybe, because that's where ADR low is located, 83.30. So yeah. Bloody trades with D. Sounds fantastic, yes. That one I like. Yeah, effing trades with D. How about that? Smackhead trades, yes. And the true Red Dwarf style. Evanswood says, I'm finding that half back from high or low towards settlement is a great level. Do you ever look at this? Yeah. So I actually use that point as something called the trigger for my Q points. So whilst I don't necessarily run trades from the 50% point, I will take it as a trigger for quartile points, which basically looks at the most recent swings and then taking the quartiles of that swing as trade locations of interest. So yeah. So, will you enter on a long if gold hits 48.35? No. I would more likely fade that, frankly, because I want to... look, the gap that's remaining on gold is very little. Let's do that for the final 4 minutes. The gap fill is already pretty much completed on gold. So, what have you got left from the gap? So what? Where do I put my stop? You get involved at the break, and then you have exactly maybe $10, if that, not even $10, to take your profit. So to me, visually, this is a terrible setup, right? A good setup, visually. Let me try and find those long and short positions. When you look at the structure of where this thing came from, where the gap is located, and where Asia high and low is, in the simplest way, not really complicating, not using volume profile, just the pure structure. In fact, let's get rid of this. Let's just look at the structure. Where's your high, where's your low? And where's your next gap close? So that's the gap close. So you want to run a trade that looks something like this, right? To me, that is a complete waste of time. Waste of mental capital, not enough ticks, and a whole loads of risk. Why? Because you're going against the Asia high that already established a high there. So they already said, we didn't close the gap, we had trouble on the first try. Okay? So to me, a better trade in the situation of longs would not be to mess around at the highs of Asia, but instead to use the Asia low swipe and then go long here. Maybe even the swipe of the most recent 4800 touch of the moderate put support, but at the right time of day. Okay, so those are both better. Why? Because then my profit margin would be from somewhere here all the way up to the gap close. But now if the gap closes without me, that changes the picture. So that's no longer an option, right? It's completed. So I can't run another double dip gap close. And when it comes to shorts, you have two options. So you can look at the gap as a single print. In fact, that you can see on the profile. So if you take that into consideration, and you take that they failed on the first try, they might pop into it again in reverse. So then you have a liquidity sweep of Asia that you can maybe run like this. But in that case, you have two targets. You have a target at the moderate put support of 4800, but you also have the entirety of the Asia range, which increases your profit margin visually and structurally massively, okay? And then if they continue to go higher, because technically this gap is in the middle of the swing, then the next point of interest would not be until we get all the way back up here, right? So that way you have anchor points that are stopping you from doing flipping and flopping at the same level, and you analyze and diagnose the chart properly, okay? I don't like doing 50% frequency of occurrence type setups. Sometimes I do, but only if one side, like let's say a mean reversion, has more juice in it, statistically. Otherwise, I stay out. Alright, so I'm going to wait until we get to COMEX open and initial balance of COMEX and all that jazz. And that's we're going to be looking at maybe the Euro close. But I might just sit it out, wait for it. It has been much easier. D, what gives you confirmation at the level? Something I don't see many traders talk about. Higher lows, lower highs. No, so I use tape for that. So for example, I would want to see absorption. I would want to see, like for example, I have bookmap over here. Am I seeing anything? So this is crude oil. We have negative delta. We're still seeing some pretty large sort of sweeps going off and then rolling over, so that's still kind of on the short side. Is there anything on the dome? Any size? Don't see any size on the dome. It's kind of sticking out. Everything is pretty even, I suppose. But for me, it would be like, for example, seeing a sweep and then absorption and then a reversal. But, you know, I don't necessarily look for. And then after I'm in, I will look to see how a time-based candle closes. So usually 15 and 30 minutes. I don't really like using anything less than 15 because I'm already in from the order flow side of things. And then I just need to wait it out. And then if it goes into yet another drawdown, which is not usually the case because, you know, you're using the absorption at a level and a push that has a lot more momentum. So yeah. And follow through would be a strong rally with consecutive bubbles that kind of holds and doesn't lose steam. So there's like relatively consistent volume, maybe taking a bit of a breather and then kind of continuing into yet another sweep directionally. So yeah, those are the order flow tape reading things. Anyways, that's going to be it for today. Thank you so much for sharing your time with me. Great questions. I mean, this was an amazing session, guys. So thank you so much for very, very intelligent questions. And actually, now that I'm looking at crude oil, we're getting some reversal to the upside. So this would be, you know, a bit of absorption. Then you have this exhaustion of buyers, but also a heat map showing potential support at 87, right? They weren't able to take that out. So that is now not absorbed. They tried, they gave it a good go, but now they moved away from it. And now we're getting a little bit more of a heat map at 87.70. So, you know, there are ways to read tape in a more visual way. For me, a list on time and sales does nothing. I just stare at it and go. But yeah, when Bookmap came around, even though I knew what it all looked like, it was just really, really difficult for me. But yeah. Anyways, thank you so much for being here with me. We're going to bounce to give way to the opening call. Join us all. I think I'm on group coaching usually on Mondays, so maybe if you want to hang some more, ask some more questions, come and join me and my colleagues. I think it's going to be Anne-Marie and Hogue, I think we're on Mondays. So that's always a fun crowd because we're all quite close. We're all friends and we're also very knowledgeable people, I'd like to think. But in the meantime, let's see what the day brings. Don't rush. Looks like we're getting some sort of a tape bomb here. I don't look at the news, but it is what it is. Keep your head on a swivel. This was the Metal Markets. I'm Marcus Stoker D, and I will see you in a little while. Take care.